guys, and glad to have you on board again today. A very uninteresting session that happened yesterday. Really boring trading going on during this summer. Still waiting for volatility to show up so that speculators like me can actually try to do some fucking thing regarding the markets. At least there is a big problem still standing in the fact that all of the higher time frames have totally been shrinked and wrecked and been put it under control by the Fed, in which they totally destroyed all what the 4-hour daily signals could be, because they basically flood the market with money, and basically investors don't nearly give a shit about profit taking. That's the world we live in, but that's also the reality. The second problem is that the shorter time frame we're generally dealing with into those podcasts, anything going from H1 time frame and lower time frames, is now being not interesting at all. At least when it talks, when it's related to SPX. Once again, there are things happening into other marketplaces. In the Europe, volatility is quite cool, even though it's not staggeringly high either. The thing is still that there is plenty of things to do on other market, but not the SPX. I'm totally worried about the fact that this is the fucking asset we've decided to take. And I'm basically surrounded by two different opposite questions. One way is I would like to tell you something that really matters in terms of speculation, and there is quite a lot happening in other marketplaces, like so many trends going elsewhere. But the thing is that we've decided and we've signed up for this and said that we would deal with the SPX on those podcasts for recurring purposes, to get this thing and tell you and show you the process of dealing with one specific asset and just teaching you the process that you can use all over again into different marketplaces, different things. It's more of an introduction in here. I'm not making the analyst. I'm not here to teach you and find some opportunities for you. I'm here to show you what processes are when you actually trade on a day-to-day basis, what a professional actually does. So it's more about the process than the outcome. And therefore, right now, the problem is that even this motherfucking process is not necessarily meaning reliable stuff, because not enough volatility allowing speculators to do their fucking job. So let's jump right into the context, but we'll get to explain why I get to this conclusion in any way. All right, so today the only thing is going to be about jobless claims, which is once again the total schizophrenic reactions of the market, in which one way we've got millions of people signing up for jobless application each and every fucking week, okay? Millions per week, which is enormous and staggering number, historically never seen in the entire history of United States. But on the opposite side, we are creating jobs, so what the fuck is going on? And even if yesterday's ADP number is totally crazy in a manner that they've been revising the previous number for 2 million jobs created on top of it, which is quite a good number, okay? But on the second hand, they also missed the consensus from 1.5 million. So it's like, all right, 2 more millions, but 1.5 million less, which means therefore it could be compensating, but it's also destroying the momentum in the perspective that we were creating new jobs and seeing that at the same time, hoping for the jobless claims to deteriorate through time and basically help us curving the unemployment percentage in the population. So I'm pretty staggeringly curious to see what the fuck we're going to get out of Wednesday, because actually even the Labor Bureau itself says that the statistics they're releasing are actually quite questionable. So we live in this world in which we have absolutely no goddamn clue about what the job market is all about. We have a president that says it's great, it's absolutely great, which means we're going to be even better than we were before. All right, pure political positioning out there. So bullshit from the president, absolutely no information coming from real economy, which means we're navigating into very shadow territory. And the more information comes in, the less the market tends to care about it. So how are we actually going to move today with those numbers? I don't even think it's very much going to happen. Just seeing what happened yesterday, we totally missed the consensus, which generally creates a shit ton of volatility. And we're going to see this on the chart. We've moved over 0.25% S&P 500 movements. This is just crazy fucking things. But that's the world we live in. Summertime trading feels like everyone is out. No one cares. No one gives a shit about the market. And therefore, the question I'm really wondering myself is whether or not I should do the same. Okay? In terms of sentiment, we're rising up to 70, which is, I think, roof basis for me. We'll see if that causes a reverse, yes or no. Anyway, we'll note that the sentiment is now hinging one step higher, making new high, higher high we've made since the coronavirus's bottom. We're still obviously far from crazy, stupid high levels we've reached out before the coronavirus, but we were, I mean, stratospheric back then, and we're actually dealing with the same prices. So actually nowadays, we're experiencing the same pricing than we were dealing with when we were staggeringly like limit going for 100 sentiment, which was absolutely disproportionate in any fucking way. Okay, yesterday's session, like we said, totally low volatility, out of any usual standard, something really, really crazy out there. Yesterday's been led by the Dow and defensive sector, industrials and stuff like that. So it really was what I was fearing in the perspective in which the tech sector is not necessarily falling off a cliff. It's not rising anymore. It's pretty much standing still, which is very bad, because when you go on a parabolic skimming shit, when you got volume and momentum reducing at the same time, generally seems a lot of red flags are out there. So I'm still maintaining heavily cautious behavior right now with those techs for at least another few days, and we'll see about it. But as long as they hold on, if we have pullbacks from the defensive sector, which is exactly what happened yesterday. All the value in industrials and stuff like that has been surging yesterday. Small and mid caps with the Russell surging as well. So defensive sector, oversold sector are now rebounding once again. And when in the same time, all the crazy overbought assets are just standing still, which creates this crazy rotation in which we're into. We do everything we can for the stock market to never release a single point, because we rotate every fucking time, but we never take profits. It's all about it. It's all about free cash. And when you piled up all the possible gains in an area, you just stop buying and you get to buy elsewhere without profit taking the area. That's just what's staggeringly stupid nowadays. No one's profit taking. Everyone is piling endless entries, bullish entries here and there and here and there. So what's going to happen when we're going to have to profit take? Because that's the matter, all right? Are we really left for a 5-year gain down the corner, really the beginning of a staggeringly great economic cycle, or are we really going over speculative on a recession? And in that perspective, oh man, the following moves are not going to be pretty, because if everyone betted on the bright side and we ended up getting something more shaded gray or even darker than expected, that means eventually prices will fall off a cliff. But that's a topic for another day. So in terms of asset prices, okay, worldwide and specifically Europe, we're still standing still below major resistances. So it's still probably overlapping structure, which means we're in danger territory. It better has to be bullish, because if it ever gives a bearish sign once again, it means downtrends down the corner, which is what obviously everyone would like to avoid. Regarding the VIX, we still stand still on the support. We're just sitting out there, not breaking the support. This is a derivative contract. This is the future VIX, okay? The real VIX has managed to close at 23 yesterday and heading even lower today. So even yesterday was an out of normal type of day, and we're going to rapidly invalidate it today. Probably bullish engulf the VIX and bearish engulf the stock indices. Or yesterday was actually the invalidation days for my strategies, and that's what we're going to be trying to answer with the charts. All right, sorry, there we go. Regarding bonds, same thing here. Lots of things to talk about. We can definitely see that the deterioration is far more visible on the 2-year notes rather than the 30-year. So that is the thing that in which the faster end of the yield curve is showing some lack of strength type of signal. So we'll see all about it. It's something to monitor. Don't anticipate out there. I'm just noting the fact that the worst one is the 5-year note, which is basically made a bearish engulfing yesterday. Not the prettiest type of thing to show. Okay, so we're still wondering what the fuck is going on with these things. Still monitoring, but as long as the supports are not broken and neither the resistances, nothing actually reliable shows out of there. We know that the area is major in terms of interest, but God knows what answer we'll give out of these strong resistances. The 30-year is dealing with 1.1% yielding, which is historical low for the US, things that we've never seen for more than decades. Okay, so that's the thing we live in. We know about this context. Nothing necessarily massively new emerges come from this. So let's get right into the charts. Okay, the thing about it is that we have grinded our way right up to the top area of these charts. This is my resistant area. Yesterday we were dealing with an intermediate price, one I care about, which was 33.12. Has managed to actually be sustained all day long, so kind of lots of pullback over this level, but never managed to be broken through. So therefore, I suspected that either we will rapidly break it out by the end of the session. Reason why, personally, my only trading activity of yesterday's session has been selling right at the beginning of the day because I had to go away and bring the baby boy to the nanny. Reason why I sold without signals, but that is due to circumstantial activities. I never do this unless I am forced to. So I traded before and without a signal because I had to, and I simply didn't want to miss the shot. Okay, so I took some risks for defined reasons. Obviously, position sizing was totally according to potential higher levels, and stop losses far according whatever we've done. So I had very large stop loss yesterday. So anyway, this position, I still have it as we speak, because basically yesterday I never have had and I never wanted to exit that position on supports. We've tested it so many times, 4 times yesterday, and 4 times never worked out. Really felt like no one cared about this level anyway, but no one wanted to go higher in any way either. So we had lots of bearish signal yesterday. If my memory is right, I took this one and I was expecting some of a downside move, so I took a second lot in here that I actually exited at the candle close right in here with a tiny gain, but that's it. So I'm now with one position, not very well positioned in terms of prices, okay, but at that perspective, I'm still waiting for us to see what the fuck is going on with this price area. We've now reached the top area of my range, which means all of the gaps are filled right now. The cash gap is down. The future gap is also closed. So there is not any technical reasons to go higher. So what happened yesterday, regarding the fact that we were dealing into previous gap territory, I could understand that this is a market making perspective. I don't have enough time to get into detail into why we have to get into those areas and fill the gaps and whatever. But these are areas in which market making is very, very, very probable and generally just happens. So maybe yesterday was all about market making, shrinking volatility because we wanted to force investors to price in those levels and close the gaps. And now that it's done, eventually we'll stop market making these levels and we'll actually let the market decide for itself, which probably should lead to some volatility. But that's an early call. So as long as we deal with this speculative area, I can work. If we ever were to make a bullish extraction out of there, I'll have to stop working as cover trades because that would be too dangerous. A speculator anticipates the market behavior with risk management, of course, and signals and stuff like that. It's not just gut trading, but it does that into specific price area. I don't anticipate the market just out of anywhere. I'm dealing with some specific price area. So if we were breaking out those areas, I would understand that because in a specific, we live into specific context right now, okay? Anyway, when you have this context a lot, you know that you need to zoom out. So let's do the job and you'll understand what I'm talking about. So all of the reversal traders, okay, those who are dealing with reversals right now must be experienced enough. They know about this pattern, obviously, because that's one of the absolute necessity in those markets. What we're seeing right now is that you see the trend channel is so contracted that it's getting shrinked to the point that is even shorter than the actual context itself, the context boxes, okay? So in this context, every experienced trader who's dealing with reverse knows that we're dealing with price squeeze, which means there's not enough volatility in prices to make reliable trading activities. And in that perspective, we know that the 15-minute chart time frame is going to release that energy one way or another. We know that it's going to be volatile and that the first move is not necessarily going to be the right one. Though we know that if we do this, that doesn't mean the market goes down. It can do this and then this and then this. All we know is that the area is going to react violently. So any fucking thing I could tell you today is that there's nothing else to say but to wait for a few days to have extraction from these areas and confirmation from this. Okay, going up doesn't mean we're going to keep going up. Going down doesn't mean we're going to keep going down. It's really all about stupidly breaking out of these boundaries we've set it with the market making previous days on. So even if the market goes up, I'm not gonna trade those prices, okay? It would be excessive market trading for me, but I'm not gonna consider in any way that this is a validation for the bulls. All I would say is that volatility is down the corner, and the only thing I care about is the bearish extraction. So either we get bearish, and I'll care about this market, either we go bullish, take down my stop loss eventually. I have wide stop loss, but the market can go right up to them. That wouldn't necessarily be surprising. So it's really more about right now, I'm pulling back on risk taking because it doesn't feel appropriate in the current context. I'm still trading because we're in my area. So as long as we're in there, I'm trading, but I'm totally aware that we're gonna get to extract from this area right now, either to try going higher or going lower. But all I know is that volatility is down the corner. I would goddamn hope the volatility is going to be to the downside with some suspectable bad news that could come out of nowhere. I don't know. We need headlines. We need something that drives the market one way or another. And so far we just got nothing. Or at least we had bad news, but the market doesn't give a shit about it. So either we're going to shock the market, or we're going to, I think, without any significant news, we're probably going to try making market excesses, because that's generally what's the most probable in this context. That's the problem. We live into very mature trending, okay? Normally we're supposed to see reverses out there. The problem is we don't see the sellers. There's no buyers either, but the thing is that we live in this market in which people think that price will rise forever, because that's the thing, inflation, whatever, lots of stupid traders trading on their cell phones, lots of stupidity in the market right now. So just a few buyers coming out of nowhere can actually drive price action. And when the market is driven by stupid pricing, then this is where we can actually see a lot of excesses. So all I see right here, right now, is that the professionals like me, they looking at the market, not necessarily actively trading because they know we're living into dangerous areas and dangerous waters. But in the same time, I see some very aggressive traders don't nearly giving a shit about risk managing and actually buying the market. So that drives prices higher. That can lead to some fairly excessive prices. If that's the case, we'll let them deal with and eventually catch up on these on September. But until then, that's the message, okay? Let's get to the conclusion. Oh, sorry. I'm going to get to make it work. Okay. All right, conclusion's fairly easy today. Two ways to approach the market. Either you're experienced enough to deal with reverse, and out of what we've said yesterday, just one more thing is need to be added today. We're really squeezing prices, okay? Not squeezing the momentum, squeezing prices, which means not enough intermediate volatility for us to make these things reliable. Remember that the strategy is all based not on gut trading, not on my invention. These are patterns, very complex patterns and statistical behaviors that should produce market risk reductions. The problem is those patterns require enough volatility to work, which we don't. So you know that the statistics and the technicals you're going to get, specifically in the 15-minute context today, doesn't actually worth any fucking thing statistically speaking. So you might see signal, but if you actually care about them saying, oh fuck, I've got an exit, that means the market is going to heavily reverse. That's what we've had all along yesterday. Exit signal, and what the market did, I don't give a shit. So it is one of two options. Either we have been market maked yesterday because the market maker wanted to fill the gaps. That's one option. And in that perspective, we must see volatility today. Option number two, this wasn't a market making, this is just the market going excessive, and in that perspective we might see a shit ton of volatility, and that includes fairly significant increases in prices, which means you got two options. Either you just get the fuck out, you say, all right, it's going to be stupid, I just don't want to be out there, you stop speculating on reverses. I would totally understand that. That's probably the most rational choice to do. Option number two, you keep on with the plan, but you must be aware that risk is significantly increasing, which means if you want to stick to what you want to do, you must have much wider stop losses than what you think about, because we can have some stupid upside move and you definitely don't want to be stopped out of them. Okay? No reinforcement, and we pause the reverse as long as the area is not dealt with and extracted by the downside with some daily and weekly candle closes. Okay? So don't be aggressive, be patient, be resilient, be really cautious with anything that is below 15-minute short time frame, because it doesn't worth any fucking thing regarding the very low volatility we have. So waiting for volatility to show up one way or another, and remember that the volatility can show up to the upside as well. So very dangerous things down the corner. I don't know what the fuck we're waiting for, but I'm hoping volatility is down the corner. And as long as it doesn't, if we get out of my price area by keep on doing those crab wave, like up, doing nothing, up, doing nothing, up, doing nothing, then just trigger the stop loss, get the fuck out. And we were wrong. We were dealing with a speculative area. No one shows up. This thing happens. I mean, so if I'm wrong with the tradable area, and I could be, I doubt I am, but I actually could be. And if that's the case, then that's just a necessary stop loss. We were wrong, moving on to something else, and we'll see about it. So anyway, hopefully tomorrow we'll get more information. Yesterday, I hoped we would get by today. We actually don't. We're just, the only new thing nowadays that we're too less volatile. And on the other way, we've just dealt with the market top or the higher prices of my selling area. And so far, the reaction is pretty mitigated. So we'll see all about it tomorrow. Bye, guys.